Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is July 31st, 2025, and we're diving into the latest earnings report from Anheuser-Busch InBev, a global leader in the brewing industry. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Anheuser-Busch InBev, known for its iconic beer brands like Budweiser and Corona, has just released its earnings for the first half of 2025. I'm excited to break down the numbers and discuss what they mean for investors.
Revenue and profitability overview. Let's start with the top line. Anheuser-Busch InBev reported a revenue of $28.6 billion for the first half of 2025, which is a 4.2% decrease compared to last year. However, the profit of the period saw a significant increase. John, can you elaborate on this?
Absolutely. While the revenue did see a decline, primarily due to volume decreases in key markets like Asia-Pacific and North America, the profit of the period increased by 41.1% to $4.57 billion. This was driven by cost efficiencies and a reduction in net finance expenses, which significantly boosted profitability despite the lower sales volume.
EPS forecast and analyst estimates. Now let's talk about earnings per share. The adjusted EPS came in at $1.79, which is a substantial beat compared to the forecast of 94 from 5 analysts. What factors contributed to this outperformance?
The significant EPS beat can be attributed to a combination of factors. The company managed to cut costs effectively, particularly in selling, general, and administrative expenses, which decreased by 4.7%. Additionally, there was a notable reduction in net finance expenses, down by 41.9%, which further supported the bottom line.
Operational efficiencies and future outlook. John, operational efficiencies seem to be a key theme in this report. Can you tell us more about how Anheuser-Busch InBev is managing its operations and what the future holds?
Indeed, operational efficiencies have been crucial. The cost of sales decreased by 6.1% to $12.6 billion, and SG&A expenses were reduced by 4.7% to $8.8 billion. The company's focus on premiumization and digital initiatives, such as the Bees platform, is expected to drive future growth. Normalized EBITDA, although slightly down by 1.3%, reflects the company's ability to maintain strong operational performance.
CEO-CFO statements and strategic initiatives. Unfortunately, we don't have specific statements from the CEO or CFO in this report. However, can you discuss the strategic initiatives that Anheuser-Busch InBev is focusing on?
Certainly. The company is heavily investing in digital transformation, with platforms like Bees capturing significant market share. They're also seeing growth in no-alcohol and beyond beer segments, with innovations like Michelob Ultra Zero and Busch Light Apple leading the way. These initiatives are crucial for maintaining competitive advantage and driving future growth.
Key takeaways. To wrap up, Anheuser-Busch InBev has delivered a strong performance in terms of profitability, despite a slight dip in revenue. The company's focus on cost efficiencies and digital transformation is paying off. John, any final thoughts on their investment prospects?
Overall, Anheuser-Busch InBev is well-positioned for future growth, especially with its strategic focus on premiumization and digital initiatives. The significant EPS beat and profit growth are positive indicators for investors. It's a company to watch closely in the coming quarters.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Anheuser-Busch InBev's performance in the comments below.